Alright, it's Scott here from Scalping Trading, and what I want to do here is yesterday I traded the Euro US dollar live in preparation for live trading next week, and I noticed a couple of really interesting things, and I think there's a lot of learning to be done. So let's just walk through the European trading session bar by bar, and I'll show you what I found. Now, what we do here is we have our chart set up with a 2-minute, a 5-minute, and a 10-minute, but the 5 and the 10 aren't strictly speaking necessary until you get it set up. So to make things clear, I'm going to walk through bar by bar. So we start trading at 2 a.m. Eastern Standard Time, just before the start of the European session. I wasn't actually sitting at the screen for this, so I missed the first two trades while I was here. So here we have a touch of the Bollinger Band, so immediately we start looking for, firstly, a lower close, which we have, and then a higher close. So we have a setup at this point. It's within our trading window, and then we look to see, have we got confirmation on multiple time frames. You can see on just following this crosshair to here and to here, on both the 5 and the 10 we have confirmation. This is an absolute setup, which gets immediately stopped out, but there's something very interesting about it, and I want to show you that. So if we look at, we use a minimum viable stop distance of 3 pips. So you can see 3 pips on 215. Let me just add in minimum viable. So what happens when we have a stop distance, you can see that our entry point is a tick below the low here, which is 1.1154, and our stop loss is 1.11565, which is 2.5. Now, if you're trading a 2.5 pip R value, your position size is going to be so big that commissions and brokerage are going to take an unacceptably large chunk out of your profits. And so we don't want to give it all back to the brokers. So what we do is we trade on a minimum R value. So at this point, we we place our stop 1 tick above here as usual. So the stop is, let me check my spreadsheet. $1.11565, which is correct, and the entry price is 1.1154. So we have a loss of 2.5 pips on a 3 pip R value, so that loss is only a 0.83 R loss. So it's a slightly slightly less than 1 R loss. So that's important to notice, that juices our expectancy over time, because we have some losses that are smaller than 1 R. Okay, so rolling right along from there. Oh, whatever the hell that happened. All right. So we have 1 trade, 1 loser. We're down 0.83 R for the day. Okay, we have a touch of the Bollinger. We have an immediate shooting star, which is what's called a retest concept. This shooting star is inherently trying and failing to get to this high, and is not. So we have a setup complete. We immediately go to our 5 and 10 minute charts, and you can see that we have our confirmation on multiple time frames. Now, we have this setup here, so we place our order entry 1 tick below, and we do not get entry. A bar later, we get another shooting star, retesting that high again, and you can see instead of entering here, we get a slightly better entry, and that entry is a decent winner for us. So we go short here, our stop loss is here, hits the target somewhere around here, runs on. We missed out a bit of the target, but whatever. Okay, so we have so we have about a 1.14 R win and a minus 1.17 R win and a minus 0.83 loss. So we're up about a quarter of an hour for the day. So we have a trade set up here, but it breaks the low and this trade is off. We keep our eyes on the ball, and we have a big increase in volatility, a drop down, and a continuation. Now, we have to start being alert for a decreasing volatility trend move, because we have a trend. If this trend goes into decreasing volatility so that it starts making new lows, new closing lows from here on decreasing volatility, so we don't have a new closing low, but if we did and volatility went down, so we don't have a new closing low. Now we do. Now, if we the way that we work out what we've got here is we put the high of this. Sorry, it's really quite difficult to do here. So at this point, we have a new closing low, and we become aware of new trend following setups, and we don't take counter trend setups. Now, what's interesting is on this bar up and this bar down, we've completely broken this pattern. So we are out of trend following mode again and looking for mean reversion setups, and the market flips us back into trend following mode shortly thereafter. Now, you can see that the scale is really weird on ATR. So the way to work this out is to put the peak of the scale on the left-hand side of your chart, and it makes it, see how it makes it all much clearer. So here we have a lower close. From here, we have a lower close on decreasing ATR. So at this point right here, we are looking for shooting star setups to take in the direction of the trend, and we are not taking mean reversion setups until something changes. So here we have a very interesting mean reversion setup because it's a very tiny range. We check the confirmation evidence. Where are we? So you can see here, the confirmation evidence is fine. We're definitely on a trend down. We have a pullback to around the moving average sign, so it's fine on the 5. And on the 10-minute, we have the market walking down this outside Bollinger, so it's also fine. So we would go short here. Our stop loss is up about here because we're using that minimum 3 pip viable R value. It doesn't save us. We get stopped out. So we have 3 trades, 1 small loss, 1 full loss, and one full win. So we are actively searching for short mean reversion setups and shooting star setups in the direction of the trend that touch one or both of the moving averages. At this point, we have a very unusual setup. It's a trend following short setup, and it's also touched the upper Bollinger. So we check for confirmation on multiple time frames. Let's look at the 5-minute happened right here. We have a downtrend. We have a pullback to the moving average zone. We have evidence that the pullback is over. That's a solid take. And on the 10-minute as well, identical. So we would go short here, stop loss above here, and several bars later, it also becomes a mean reversion setup, but we cannot take that mean reversion setup because we're already short. You can't take a trend following setup and then a mean reversion setup. It's the same damn setup. So our setup wins about here. Let me just check my spreadsheet here. And where are we at? 434 was the next one. Okay. So this is very interesting. We have a touch of the lower Bollinger, we have a number of higher closes, and we have a lower close. The setup is complete. Now, the real question is the risk-reward ratio attractive enough for us to take this trade? And here, our 1.1R target is 25 from memory. It's somewhere up around here. So the line in the sand is, can we get a 1.1R target even if we're wrong? And it's a little bit dubious from there. So I was thinking that this is potentially a good setup, but I want to hope for a better entry. Immediately 1 bar later, we get a better entry. This is a very tight setup. So our target is about here. That's beautiful, right? So even if we're wrong and the market is still falling off the plate, there's still a decent chance of us getting a win. And that's how we juice the win rate here. What we're doing is that we're trying to there's 3 things that can happen, right? You can be going down, you can have an uptrend reversal, or you can have a sideways market, which happens most of the time. Now, what we're trying to do is juice our win rate to about 2/3 by covering 2 out of the 3 potential possibilities. Easy, right? Okay, so here we need to check, do we have multiple time frame confirmation? You can tell we have lower Bollinger touches, multiple time frame confirmation. We get into the trade, fucks around for a bit, looks a bit greasy, and bam, we're good. All right, so 434, 5, and then 510. Okay, we touch the upper Bollinger here. So now we start. So we have, every time we touch the upper Bollinger, we have to be aware of the potential for short setups. Now, another thing to notice is that we've broken this pattern of decreasing volatility, so short setups are back on the table. So we have a significant higher touch of the Bollinger, a lower close. We're waiting on a higher close or a shooting star. We have a shooting star that completes the pattern. Let's check. Do we have multiple time frame confirmation? Yes, we do. We have. This is the way it would have looked like in real time. And on the 10-minute, it looked like. Okay, so you can see that on the 5-minute we have a clear downtrend, we have a pullback to at least the moving average zone, and we have evidence that the pullback is over, namely that we've got a completed shooting star and break of that shooting star. On the 10-minute we have slightly less convincing, but it's still a pullback to the moving average, and it's still evidence that the pullback is over, painted an incomplete shooting star. Okay, so we have a completed setup. We go short here, stop loss above here, 3.5 tick range, and we're immediately stopped out. Shitty. Here we have, and this is very, very interesting, we have a near identical setup painted straight away. Shooting star completes the implied retest of here. So we go short just below this low, stop loss just above the high. Now, because I use interactive brokers, the way that I size my positions is that I look at this and say the low here is 1.1141.7, and I would place my entry point at the nearest half pip below that. So that's 1.1141.5, and my stop loss is 1.1145.5. You can see that's what it looked like on my spreadsheet. And so that's a 4 pip range. So we're doing a 4 pip range for a 4.5 pip target. Okay, now a 4.5 pip target looks like it's going to make it, doesn't quite make it. It's going to be exactly here. So it doesn't make it. Now, if I'd done it the other way of doing a 10th pip down and a 10th pip up, it would have made the target here. Mine still, the low is 37.5. Hang on, let me just double check that. I thought I didn't make it. So 41.5 minus 4.5 is 37. No. Okay, so my target was 37 and we got to a low of 37.5. So if I did it the other way, I would have hit the target here. But because I chose to do it this way, which was unlucky and it did not hit the target, it hasn't stopped me out yet. So I cannot consider this short setup here. This long setup along the way, there was no confirming evidence, so we can't confirm that. You can see here there's no reason to go long here. It's still a downtrend. You can't take this short setup because you're still short. And bam, we're out of that. Okay. At this point, we have another touch of the upper Bollinger, and we have two things going. Oh, here we go. Okay. We have a touch of the upper Bollinger, and you can see we have a touch of the upper Bollinger on the 5 and the 10. Now, this means that we're immediately and unequivocally stalking a short setup if the market isn't in low volatility trending mode. Now, this is really, really interesting because there's the chance that we're just going to melt up and we shouldn't be taking short setups. We have a two-phase question. Question one, when are we trending? We're not trending up here. We're trending up when we get a confirmed breakout above here. We're trending up at that point, right? Now, look at this last bar. See how ATR has gone up from here to here? So even though ATR volatility going down in a sideways period is perfectly normal, happens all the time. Volatility going up as we break out is also perfectly normal. There's nothing unusual here. Now we want to look closely, and I mean closely, at this bar. We've gone up and volatility is up. So even though there's a possibility this will go into low volatility melt-up mode, it has not yet. Now here, we are going down, we're going volatility up still. Okay, at this point, do we have a setup that we can still get a profitable trade if it remains a trading range? So we work out where our target is, which is about here, and say, okay, if this remains a trading range, it's probably going to get to the bottom of the trading range, and so that's okay. So we would take this setup. This setup is not entered. We get a slightly better entry the next bar, so we recalculate our position size. And 632, and you can see at 632 we have a 4 pip target, and yeah, hit the target somewhere around here-ish. All right, so at that point, this setup here is way too far. Our target is somewhere up here. We can't take that. This setup, short setup, even though we're decreasing in volatility, this is not a confirmed trend down. We can't take this. Even though it is now a confirmed trend down and we have a shooting star touching the moving average zone, we can't take this because you can see that volatility, if we look at the ATR down here, is going up. Okay, here, this would have been and I was watching this very closely. I wanted to get long here, but we didn't get a setup. And this one is too far. The risk-reward ratio is all the way up here. That's a sucker trade. And once it breaks the low of this bar, that's all off the table. So again, this one has a target of 20, which was down here. So to get the target, we would have had to make fresh lows and not just a trading range. So even though, if you look at the bigger picture of the market's obviously going down, it's touched the upper Bollinger, this is a very compelling trade. This is one that I knew was going to work, but it did not fit our rules, So you can't take it even though it would have fit your rules. Now for the rest of the day, it just doesn't paint any more setups, and 8:52 is just after my trade window, painted another beautiful winner. So I hope you can see that just recognizing the setups is really, really tricky in real time, and it requires a lot of practice. I'm switching from futures to FX over the next couple of weeks, and I'm finding it really challenging. I'm not ready to start placing those orders with real money for real time. I'm probably about a week away from doing it. And what I would suggest is that you need to do a serious process to implement the system. The first process is being able to recognize these setups in retrospect. Then you need to be able to recognize these setups in real time, which is dramatically more difficult. And then you need to be able to do that while you get spreadsheets placed in real time, like in real time. And then you need to be able to do that while you get orders placed in an order platform in real time, which requires keeping track of where the bars roll over and keeping track of time. You need to know we're trading 2-minute bars. We've got 10, 9, 8, 7. And then when you've done all that and you can do that perfectly, then you're ready to trade real money and small money and for a small amount of time. What I found yesterday is that I traded for 5 hours and I found it emotionally very draining. I'm used to trading for 4 hours, and that extra hour just kind of sucked for me. And it's going to take some time to build up the mental muscles to do that, and you're going to experience the same. So where I would suggest you start is about 2 hours of trading until you can do it perfectly. Now the name of the game of system implementation is perfect. Near enough is not good enough. You have to be perfect. So what you've got to do is pick an achievable goal. Pick a target that you can trade. If you can only trade 1 hour perfectly every day, trade that 1 hour. Get those spreadsheets looking perfect for 1 hour, and then when you can do that, you gradually ramp it up. Now that's what I'm doing, and I don't naturally assume, because I've been trading futures for so long. The reason I'm switching to FX is that most of our clients are FX traders, and I don't want to be doing something completely different than them. I want to eat my own cooking, but it's been a long time since I traded FX, and there's just a learning curve. I can't, no matter how many years of experience I have, no matter how good I am, I can't just say, oh, fuck it, I'll just wake up tomorrow and trade FX. That's going to be a fucking disaster. I'm realistically 2 or 3 weeks away from trading this at proper size, live in front of you guys. It's actually harder when I've got the camera on me, and I feel like a dick if I make a mistake and all that sort of stuff. So what I'm saying to you is, if you'd like my help implementing this, or if you want more detail on the rules of the system, you can go to scalpingtrading.com, and if you're interested in our incubator program, it's a 6-month course, and it's going to take you through the absolute transformation where you walk in knowing nothing and you walk out being able to do this perfectly every time for a number of hours a day and achieve your trading goal. So if you're a good fit for the system and you want to work with me and just do exactly what we've done today, like if you want to do exactly what we've done today, that's what I'm teaching, nothing else. That's what the incubator program is. You can book a call with me and we can explore if we're a good fit. All right, guys, thanks.